Very good morning to all of you soldiers. Let us take up a question from the chapter 1, Nature, Objective and the Scope of Audit. RST Limited is a retail company and has set up internal controls requiring all the invoices to be stamped and signed by a authorized person in goods received section of the company, stating the date and the time of the receiving goods in the premises to ensure that only those purchase bills are produced for the payments for which the goods have actually been received. So what is happening here? There is a retail company, they have a control. See, what is internal control? It's a policy and procedure of the organization actually. So what happens? As per the policy, all invoices should be stamped, it should be signed by authorized person in the goods received section. Okay. And it will state the date and time of receiving the goods in the premises to ensure that only those purchase bills are produced for the payment for which the goods have actually been received. So you will have only those goods which are actually being produced, only those goods will come into picture. During the audit, auditor finds two employees, a purchasing manager and accounts clerk, have worked together to bypass this control, submitting fake invoices that results in payment for goods that were never received. So what they did is that they submitted a fake invoice. And because this fake invoice was submitted, what happened is that they bypassed the control. What was the control? Goods received section, you receive the goods and then you have made the payment. So there is a complete, what you can say, bypass in the internal control. So submitting fake invoice that resulted in payments for goods that were never received. You are required to state the objectives as per SA 200 when it comes to ensuring the reliability of financial statement. Also explain why auditor can provide only reasonable assurance and not an absolute assurance that the financial statements are free from material misstatement due to fraud and error in the context of given situation. Two questions they have asked. One, they are asking that what are the objectives of audit? What are the objectives of audit as per SA 200? Second, what they are asking is that as an auditor, you provide only reasonable assurance, you don't provide any absolute assurance. So there is no absolute assurance being provided by the auditor. Auditor is not providing any kind of absolute assurance. There is always a reasonable assurance which an auditor provides. So in this case, how do you take the situation? How do you take the scenario? Now, first of all, SA 200, the name of the standard is what? Overall objective of independent auditor and the conduct of audit as per the standards on auditing. Okay, so this is the name of the standard. So when you are in the examination, please write down the essay number and name. What is the essay number and name? SA 200, overall objective of independent auditor and conduct of audit as per the standards on auditing. And SA 200 is nothing but what you can say, my dear soldiers. It is what you can say, it's more of what, whenever we talk about SA 200, SA 200, it is like a standards on auditing which acts as a guidelines for the auditor. Now it talks about the objectives of the audit. What are the objectives of audit? One, to obtain reasonable assurance whether the financial statements are free from material misstatement due to fraud and error. So the auditor has to obtain a reasonable assurance that the financial statements are free from material misstatement due to fraud and error. So reasonable assurance means it is not absolute assurance, it's a reasonable assurance. It is a little bit less than the absolute assurance, but it is more than the limited assurance. In the terms of percentage, I can tell that, okay, 80% of accounts are correct, 80% of my accounts are correct, like that. Okay, that is what you say. Means 80% it may be correct, but 20% it may not be correct. Okay, so we want a 80% assurance only. So to obtain a reasonable assurance, my dear soldiers, whether the financial statement as a whole are free from material misstatement due to the fraud and the error. Are they free from what you can say the material misstatement? That is the first thing actually. Okay. So are they free from these material misstatement? You as an auditor, you have to explain the same actually. So Are they free from any kind of material misstatement? That you need to highlight, that you need to give it actually. Okay, that's the thing actually. And further, what happens, my dear soldiers? Further, the thing what it goes actually, whether the financial statements are prepared as per applicable financial reporting framework. So this is the second objective. Means, are you prepared as per the applicable financial reporting framework? That you need to check. To report on the financial statement and communicate the as required by the standards on auditing in accordance with the auditor's finding. That's the thing here. So you have to report on the financial statement, and second next one is what come on. You have to communicate as per the requirement of what you can say as per the standards on auditing as per the auditor's finding. That's the thing actually here. So now these are the things actually here. So this is what you need to understand about what you can say the standards on auditing. That's the thing here. So to report on financial statement and communicate as per required as per the standards on auditing in accordance with the auditors finding. That is the thing actually here. This is what you need to highlight and understand, my dear soldiers. This is the thing actually. This is what you need to highlight. That's the thing actually. So to report on financial statement and communicate as required by standards on auditing in accordance with the auditor's finding. That's the thing actually here. So this is the thing actually. So four objectives are there. One, I have to obtain a reasonable assurance that whether financial statements are free from material misstatement due to fraud or error. Second one, I have to see that whether financial statements are prepared as per applicable financial reporting framework. Third one, I have to report on financial statements. See, I have to express my opinion on financial statement. And the last thing, I have to communicate as per the requirement of the standards on auditing. Okay. Now the second part of question what it is asking, that auditor can provide only reasonable assurance that the financial statements are free from material misstatement. He cannot provide an absolute assurance. Correct. Absolutely correct. So this is a inherent limitation of auditing, because audit risk cannot be reduced to zero. You can't reduce the audit risk to zero. That is a challenge, my dear soldiers. So because of the fundamental limitation in the financial reporting, you can't reduce the audit risk to zero. That is a major problem actually. That's the thing, a major problem in the auditing here. So what is the reason? Because of the nature of financial reporting. First reason is nature of financial reporting. Financial reporting means accounting. Second one, nature of audit procedures. We may apply an audit procedures whereby we may not be able to obtain evidence. Now in this case, there is a bypass of internal control. We may not get an evidence. So our procedures may not be specifically directed towards that. Third thing, there may be, because auditing is not a investigation. Investigation, you have a power to obtain evidence. Auditing, you don't have. Then the timeliness of financial reporting and the decrease in the relevance of information over a period of time. So as the time progresses, the relevance of information, it gets reduced. It gets reduced actually. That is the thing actually. So now, my dear soldiers, understand that the preparation of financial statement, because when you look at financial statement, it involves a lot of judgment by management, and judgment, it involves what you can say subjective decisions, or there may be certain a degree of uncertainty. Example, you may have accounting estimates. Accounting estimates, like say provision for bad and doubtful debt, you can't get an accurate amount. You estimate, and there is a lot of judgment involved there. So management, that is why what happens, management may not estimate that amount correctly. It's a limitation in accounting itself because of the nature of financial reporting. So auditor also may not be able to obtain what you can say an absolute assurance that the financial statements, what you can say, are free from material misstatement due to fraud and error. That's the thing here. So even auditor also may not be able to obtain a absolute assurance. That's the thing actually here. So please understand, it is the management responsibility to prepare financial statement as per the applicable financial reporting framework. That's the thing here. And they need to design suitable internal control. That's the thing here. Suitable internal control. That is the thing here. Such controls, my dear soldiers, they have to, my dear soldiers, understand that they have controls have not operated, my dear soldiers, to produce reliable financial information due to their own limitations. That's the thing here. Okay. Now, in the context of RST Limited, my dear soldiers, in this case, actually, here, what has happened? So, the management has designed the control that all invoices should be stamped, which will be signed by the authorized person at the goods received section. Okay. Now, this is a good control. I mean, there is a checking happening what time you received the goods, when you received the goods, on what date you received the goods. Now, because of the collusion of two or more employees, collusion means two or more employees they come together and for the committing the fraud. What is the fraud they committed? They raised fake invoices. So, what is happening, my dear soldiers? So, they are trying to override the control. Control is there. What does the control means? Internal control means it's a policy and procedure of organization. And these two people are overriding the control. That is a unfortunate situation. And that is why what happens, my dear soldiers, auditor cannot provide you absolute assurance, rather he can provide a reasonable assurance. Reasonable assurance he can always provide to you. Okay, fine, soldiers. Okay, with this I conclude this question. This question is coming from the January 2025 revision test paper. So from the chapter 1, nature, objective and scope of. I'll see you in the next video. Thank you very much.